All right. So maybe because we are not in the competition, so I wasn't keeping tabs on the competition. But I'll be very, very brief. Okay. Okay. So this shouldn't be longer than 1 hour, and that will be based on the types of question that I receive. So at any point in time, if you have any question, just leave your hands raised, and you'll be allowed to speak. All right. So thanks for everyone that tuned in, and let's just dive into it. So we are going to be talking about swing trading strategy that I used, and I'll show you the aggressive style that I actually applied this particular strategy. My name is Shola, by the way, like you already know, in case you don't know. So my name is Shola, and I'll be your host today. But before I just jump in, let me just double check. I would randomly allow someone to speak just to confirm if you can hear the sound of my voice. So I'll allow Mr. Daly. So just, I'd like to confirm if you can hear my voice.
Yeah, good evening. Clear, very loud and clear, sir.
Okay, perfect. So thanks for confirming that. So let's dive into the business of the day. So first of all, I want to show you some proofs because I said it's going to come with proofs, right? So this is a prop firm account. I've actually not talked about this particular prop firm publicly, but that's a different story for another day. This is Think Capital, and you can see that on the 4th of October, I was able to pass this 100K accounts. And I want to show you the trade because that is how I'll be able to explain this strategy, right? I have like 2 slides back to back, and I'm going to break down all the trades, the rules, and everything. So this is, don't get it twisted, this is a swing trading strategy. All right. So what will happen is at the end of today's session, I'll show you the strategy, everything you need to know about the strategy. I'll also talk about some losing trades because it's not always a bed of roses in trading, right? And then I'll show you the trade I'm currently in at the moment. We're using the same strategy, which is AUDNZD. As you already know, I trade Euro USD, but this particular strategy can be applied across board, all right? Because to get these types of opportunity, you need to look at multiple assets, all right? Like, I trade basically everything with this strategy, I think, except for stocks, most of the stocks, right? But every currency pair, I trade it with this strategy because I need more opportunities because it takes time for these types of trades set up to mature. But I'll break it down real soon. So let me, first of all, this is the trade I'm currently in, and I'll come back to that, why I took that trade. The trade has not moved an inch. It's still at the entry points, but I'll come to that real soon. But let's go to my slide. Let's go back to my slide. So I'm trying to analyze this trade that I used to pass this particular account here, this 100K account with Think Capital. All right. So let's go to my chart. This is the 4th of October 2024. That was when I passed that account. So I'll go back to my chart. I actually took this trade on Euro USD. All right. And I'm going to break it down right here. I took the trade right here. That was sometimes last month. So let me break it down. The rules of this strategy is this. You go to the higher time frame, like the weekly time frame, specifically the weekly time frame, not like specifically the weekly time frame. Then you look for dodgy candlestick pattern. Now, how do you determine a dodgy candlestick pattern? Now depends on you. That's where discretion comes in. All right, that's where discretion comes in, because there's this textbook definition of dodges, but in the real world there are slight tweaks. You understand? You just need to learn how to adapt through experience and maybe proper mentorship, or through experience. Basically, you can actually detect the different types of dodgy candlesticks, right? And I'm going to show you, because this particular example right here is a perfect dodgy candlestick. So the current trade I'm in at the moment is kind of not that textbook kind of dodgy candlestick. But if you can stick around to the end of this webinar, you'll be able to see that type of dodgy candlestick. So the rule of this particular strategy is, hey, you wait on the weekly time frame, you want to spot a dodgy candlestick. And now you don't want to, in fact, let me put it on the screen so that we can all follow, right? You waited for approximately 1 week for this session. So it's my job to make it worth your while, right? So I'm going to put all the rules here so that we can all follow. So rules, let me just put it here. Rules. Then I'll come here. Number 1, you want to look for dodgy candlestick patterns. Dodgy candlestick pattern on the weekly time frame. Give me a second. Let me reduce the font size of this stuff so that we can. Oh, someone said you can. Can you all see my screen, please? All right. Let me allow split seconds. Split second, please unmute if you can, and let me know if you can see my screen. To be able to speak, you need to unmute yourself. If you can hear me, split seconds. Okay, I'll allow Milo or Milo. Okay, Milio or Milo. You've been allowed to speak, so just unmute yourself. I want to confirm if you can see my screen.
Yeah, you can see it, but it looks glitchy. Like you see like 10 screens zoomed into one.
How about now?
Yeah,
it's got fine. Multiple screens.
Okay, how about now?
Yeah, that one's fine.
Yeah, I think it's better now.
Okay, perfect.
Yeah.
Perfect. All right. So, Mr. AY, you may need to drop off and rejoin. So that since we can have 2 people confirm that they can see my screen, then I think it's from your end. So you may need to drop off and rejoin. All right. Let me make sure I am recording. Let me just double check. Okay, yeah, I am. All right, so the rules number 1 is to look for dodgy candlestick pattern on the weekly time frame. On the weekly time frame, not the daily, not the 4-hour, not the monthly, the weekly time frame. Then number 2, make sure that this dodgy candlestick pattern is forming at an area of value. Dodgy, let me just put it this way, dodgy at an area of value. So by what I mean by an area of value, now it has to be at a resistance level or a support level. All right. So the idea of this strategy now is, hey, if this dodgy forms at an area of resistance, you are anticipating a sell-off. Remember, resistance is above and support is below. Let me label it so that we can all follow. So I'll put resistance. We all know, I believe most of us on this call know what resistance means. So for those that may not know, so let me not just assume that we are all at that level yet. So let me just put it on the screen here. So resistance is above price, support is basically below price. All right. So if we get a weekly dodgy candlestick at an area of resistance, then we are anticipating a sell-off. That's the rule of this strategy. And then when we get this dodgy candlestick at an area of support, we're anticipating a buy-off. That's the whole idea. So we spot a dodgy at a resistance, we're expecting price to push lower. We spot a dodgy at an area of support, we're expecting for price to buy off. Now, this is a resistance and support, the flat resistance and support, which can be represented by a line or most preferably that rectangle too, so that you can capture multiple zones, right? Again, trend lines can also serve as an area of support and resistance. this is a trend line here. Let me delete this. Give me a second. All right. This is a trend line right here. All right. So this currently serves as an area of support, right? And then if it is happening above, if the trend line is coming from above, then that will be an area of resistance. So I hope that is clear. So let me delete this support and resistance level here. So now we are looking for dodgy candlesticks on the weekly time frame at areas of support and resistance. Now that support and resistance can be the normal support and resistance that you know, or on the trend line, or it could be maybe a moving average if you use moving average. If you use moving averages. So depending on whatever you use as an area of support or resistance, whether the normal one we all know, or trend lines, or moving averages, it doesn't matter. As long as you are looking at that level as an area of support and resistance, it is valid. All right. So now, number one, dodgy candlestick pattern on the weekly time frame. Number two, that dodgy has to happen at an area of value. But there's a little tweak here. So remember, we're on the weekly time frame right now, as you can see here. But if you go to the daily time frame, sometimes you may notice that, hey, price is finding it difficult breaking, because what a support and resistance level may look like on the weekly time frame is most likely quite different from what it looks like on the daily time frame. I don't want to confuse you. I'm going to take questions. At any point, if you have any question, just jot it down and leave your hands raised. I'll go back there and take some questions very soon. But on the daily time frame, sometimes you could notice that, hey, price is finding it difficult breaking above or below a certain level. Now that could be your area of support or resistance, depending on that particular scenario at that particular point in time. So if maybe your weekly candlestick forms at an area of a daily support or resistance level, is also still valid. It is also still valid. But anything lower than that, I don't look at that. At least not at this point in time. Now let's go into the trade. The trade I used to pass, let me go back to the slide, that I used to pass this particular account right here. So that trade, remember I said look for dodgy candlesticks at an area on the weekly time frame at an area of support or resistance level, and you can also look at it at an area of support and resistance level even on the daily time frame. You should look at it on either the weekly time frame or on the daily time frame, not the dodgy in this case. I'm talking about that area of support and resistance level. Then if a weekly dodgy candlestick now closes at that area, is valid. So preferably, I would have loved to see this, since we are still on the weekly time frame, I would have loved to see this weekly dodgy candlestick right here form at this resistance level here. But it didn't form there. But if we go to the daily time frame now, you will notice that, hey, price came to this point, sold off. Came to that point, didn't sell off sharply, but moved sideways for a bit, which means price is finding it difficult breaking above this zone right here. So remember, that area of support or resistance level can come not just on the weekly time frame. It could also come from the daily time frame. But the major prerequisite to spotting that weekly dodgy candlestick has to be on the weekly time frame, not from the daily time frame. But a daily support and resistance level can work. A weekly support and resistance level can work, but you need a weekly dodgy candlestick to confirm. All right. Give me a second. Someone is blowing up my phone. Let me ensure that it's not one of my students. Probably they are not getting. Okay. I think it's an email. Give me a second. All right. So, wait, give me a second. Let's hold on. Okay, let's continue. All right. So notice how on the daily time frame here, price is finding it difficult after this initial sell-off. When price came back here, it was finding it difficult breaking above that zone. So it's tall. It moved sideways for throughout that week. Now, if I go back to let me make sure this zone is even visible on the weekly time frame. Let me double click, go to visibility, and check this weekly box here. All right, so if we go back to the weekly time frame now, you will notice that, hey, price now formed a dodgy candlestick at the second attempt of that daily resistance level. So that was my cue right there. Like, hey, price may most likely sell off. So let's talk about entry now. So I can't just execute on that weekly time frame like that. I can't execute on the daily time frame. So what I do is I'll go to now I have confirmed. Let's go back to that weekly time frame. So now I have confirmed that, hey, we closed for that particular week, that week that started on Monday, the 23rd of September, 2024. Let me put a vertical line there so that we can all follow in real time. So remember, when you hover on above any candlestick, depending on the time frame you are on, it is telling you the open of the candle. It's going to show you the details of the open of the candle, not the close. So since my vertical line is above that weekly dodgy candle right now, so it's telling me when that dodgy candlestick started forming. So which means it started forming on Monday, the 23rd of September. So which means 23rd, 24th, 25th, 26th, 27th. That means that dodgy candlestick closed on the 27th of September, which was on Friday. It started forming on Monday, closed on Friday, right? So let me go to the daily time frame so that I can move this vertical line to Friday. So it started forming on Monday, so I'll move it all the way to Friday. So Friday the 27th, right? That was where it closed. This was the last candlestick for that particular week. So now let me go to the 4-hour time frame so that I can move that vertical line to the last 4-hour candlestick for the week, which was on Friday. So this is Thursday, so I'll move all the way to Friday. I think my time will be 18 o'clock. 18 that is 6 p.m. my time, and the market closes 10 p.m. here, so valid, right? So this was the last candlestick for that week that formed that dodgy candlestick. So market usually opens in my time zone late on Sunday, 10 p.m. on Sunday, but I'm not taking a trade during the Asian session. So I start taking trades from 6 a.m. on Monday. So if my requirement is met around 6 a.m., I can place my trade. So fast forward to 6 a.m., luckily for me, on that day, this candlestick started forming, this 4-hour candlestick started forming around 2 a.m. I was still in bed. So I woke up 6 a.m. My alarm usually wakes me up. I have an alarm that runs from Mondays to Fridays to wake me around this time to check if there's a trading opportunity. The students already know this. So when I wake up, if I can spot a bearish candle in the direction I am anticipating the price will go to. Remember earlier I said, hey, if the dodgy candlestick forms at an area of resistance, I am anticipating a sell-off. If it forms at an area of support, I'm anticipating a buy-off. So in this case, it happened at an area of resistance, so I was anticipating a sell-off. So what I want to see, there are different models to this. If I keep going on and on, to this webinar will not end. But let me just tell you the direct way I enter this particular trade, all right? There are different shades to this. How you can enter doesn't matter. You can enter through maybe chart patterns, maybe a triple top, a double top, whatever. It doesn't matter, a bearish engulfing candle, blah, 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 since we are trying to sell, all right? So, but in this case, I just look for the first red candle when I woke up, right? That is moving in the direction I originally anticipated. So I saw this bearish candle and I was like, okay, cool. That's my cue. I'm going in. Now for stop loss, your stop loss has to be above that dodgy candlestick on the weekly time frame. That's why it's a swing trading strategy, right? Because your stop loss will be wider. In most cases, swing trades, your stop loss is wider than the normal stop loss you use when you're scalping or when you are day trading. So that is why the stop loss has to be wide, because you're ready to sit on your hands for 1 week or even 2 weeks. So my stop loss is above the wicks of that weekly dodgy candlestick that formed. That was my cue to jump into this trade. All right. Then I won't just put it right above the wick. I'll still create a little bit of allowance, a little bit of buffer. So I could still go an extra 10, 20 pips above that dodgy candle, just in case price wants to manipulate above the previous weekly candle before selling off. Or if it's a buy, before buying off. So that's what I do. So I create a little bit of buffer. Just don't put it above the high of the previous week. I don't do that. So I still create a buffer. So look at where I got in at the close of that candle. Price pushed higher. I even gave up on the trade. I thought price was going to stop me out. Remember, I used the word aggressive. I go in aggressive with these types of trade. I've not started implementing this on my normal trade, which I'm going to start from next month. I've not started implementing this on my funded accounts. When I have a different strategy, day trading strategy that I use for funded account, but I'll start implementing this on my funded account. But that's a different explanation. I'll just keep that out there. All right. But on this, I specifically use this I go in aggressively. So since it's a swing trade, I risk more. So let's say I'm risking originally on my usual normal day trading strategy, I risk 1% per trade, or let's say 0.5% per trade. On these types of trade, I'll risk 1% or 1.5. So that it can make up for the time I am sitting on my hand. Because these types of trade can take 1 week, 2 weeks, or even sometimes 2.5 weeks to clear out. So I need to put on more risk so that by the time it gets to my target, I know it was worth the wait. So you have to be able to look for a way to balance risk management in everything in your trading. All right. So on this particular trade, I put in 2.5 risk on this trade. And that's why you can notice, if I hover my mouse here, you can notice that my risk to reward was 3:2, 3.2. So if you multiply 2.5% risk on the trade, now the mindset here, don't get it twisted so that I don't mislead you. Now, what I'm doing is this. I am trying to get funded to the tune of like 5 million. All right, that's my goal. That's my target. So that's why you see me taking multiple prop firms, the trustworthy ones and the ones that are I still do my due diligence, so I don't just jump into them. Or still, I know that not all of them are going to be around eventually. But if I can get at least like 2 withdrawals from them, mission accomplished. Before they go under, mission accomplished. So that's my gameplay here. But if you want to trade this responsibly, still know how to balance your risk. So this session is not about risk management, so I won't be diving deep into risk management, because there are different ways you can tweak risk management. It's not just about your strategy. You need to be able to find a way to balance it with risk management. But today's topic is not about risk management. It's about strategy. All right. So because when I start implementing this on my funded accounts, I won't be going in with these types of massive risk. I'll risk lesser. At that point, I'll be cool with 3%, 4%, 5% returns in a month. I don't mind. I could be risking maybe 1.5% per trade. But on this trade, I went in with 2.5%, and that was why my take profit was 3.2. Now the game I play here is this. I'll buy multiple prop firm accounts. I'm aware that because of the risk I'm putting on, I'm going to blow some of them. But I will make the money back when I get funded, because there's no way I get funded and I'll blow the accounts. I could go into drawdown, it's fine. That means I'm in a hole. It will take me time to crawl out of it before making a profit. I'm okay with all of that. But the idea is once I'm funded, except the prop firm goes under, I don't think I can blow the account. Except maybe a key placed to my laptop and so, because I will keep reducing my risk if I'm in the drawdown, and when I start climbing back up, I increase it back. That's how you mitigate risk and your strategy. It's not all about the strategy alone. But like I said, I don't know, I'm digressing here, so I'm sorry for that. I don't want this to be one long session, right? So let me just stick to the plan, right? So you can notice that I put on 2.5% risk on this trade, and I went for a 3.2% reward, and that one single trade passed that account. And that's why you will notice that the moment price hits my take profit, we'll go back to the slide here. Sorry, I moved this a little bit. Here's down my take profits. My take profit is was somewhere around here. Actually, I think I mistakenly tweaked this when I was preparing for this class, or somewhere around here. So I was able to pass it on the 4th of October. So see, when I got into the trade, if I go back to my chart, I got into the trade on the 30th of September, and luckily for me, I hit TP on the 4th of this month. All right. Let's take one more example before I now go to the trade I'm currently on. It is still trading around my entry. It has not gone to my stop loss yet. It has not gone to take profit. It is still around entry, but we'll come to that. So there was another trade I took. Yes, let me go back to my slide. Don't worry, I'll take questions real soon. This is on E8. So I passed this on the 12th of I think July. Was it June or July? Remember, the topic is from the past 3 months. So I'm not going to go into details of all the trades, but I'll just show you 2 examples just to explain the setup. I've not even taught this on my mentorship program yet. I'm just giving it out here for you because I've been testing it. I've been blowing accounts too. I won't even lie to you. So within that past 3 months where I passed 4 prop firm accounts, I've blown like 3. So don't think it's all beds of roses. I've blown 3, but I've passed 4, actually. Phase 2. I'm just explaining phase 1 here. I've passed phase 1 and 2 on those other 4. And along the process, I blew 3. So I'm not just going to come here and sugarcoat everything. And it's actually because of the risk I'm putting on. I don't want to just I notice I'm a conservative trader. I want to take a little bit of that on prop firms, actually, not on investor capital, of course. I want to remove some of those conservativeness when it comes to passing challenges, and that's why I'm doing this. All right. So I blew like 3 accounts, and I passed 4. But on this other trade that I just showed you on E8, I took this trade around here. So let me go to the weekly time frame and show you the trades. Or that particular trade. Yes. Remember, the rule is you're looking for dodgy candlestick pattern on the weekly time frame at areas of support or resistance. Now, that support could be that normal flat support and resistance. It could also be on the trend line, and it could also be maybe on the moving average. I've not tried moving average though, but I use trend lines. Now, and remember, the rules of trend line is you are looking for the third touch. You want to see the first 2 bounces, then you want to connect your trend line and anticipate the third touch. Now, at the third touch here, around the 17th of June, if I move this out, you will notice that on the third touch, after the first, second, and third, I'm sorry I'm a little bit fast, right? Like I said, I don't want to take much of your time. right? If this was to be a mentorship program, of course, this topic would be split into a couple of weeks and all of that so that you know the nitty-gritty. But for those that already have an idea of trading, should be able to catch this quicker. So you will notice that at the third touch, we had a dodgy candlestick. Remember, dodgy candlesticks can pop up anywhere on your chart. So you don't want to be trading those that pop up anywhere. You are looking for those that pop up, that happens or that forms at a value zone, an area of value, not the one that just happens in the middle of nowhere. No. And how do you even determine an area of value? An area of value is a zone that price has come into previously, gave a rejection, a significant rejection historically. So that's how you can tell that, hey, there's something interesting about this zone. So that's how you know a valid support or resistance level. So historically, price bounced off this trend line, came back, bounced off, came back. So that's what made it a valid zone. All right. So spotting the dodgy candlestick here, that was my cue. All right. That was my cue. So let's talk about how I got in. Remember, this candle started forming around on the 17th of June. So which means 17th, you count 5 days. So you count 17, which is Monday, 17, 18, 19, 20, 21. So which means that dodgy candlestick was fully formed on the 21st of June. On the 21st of June, right? So if it's actually fully formed on the 21st of June, I'll go to the 4-hour time frame for my entry. I'm looking for the first candlestick when I wake up that's trading in my anticipated direction. Right? So 21st, right, of June, which was, where's that last candlestick for the 21st of June? It was around here. This was the last candlestick, 4-hour candlestick on the 21st of June. So that was the last 4-hour candlestick that formed that weekly dodgy. So I'm waiting for Monday, 6 a.m. when I wake up to see if I'm lucky enough to see a bullish candle, because in this case, I want to buy because the weekly dodgy candlestick pattern formed at a support level. So I'm anticipating a buy. So when I woke up, I saw a bullish candlestick around here. So if you look at where my hand is pointing and you look at the black label below, you'll notice that this is Monday, the 24th of June. This 4-hour candlestick started forming around 2 a.m. So which means it was fully mature around 6 a.m., which is my waking time or wake up time or whatever, right? So I can see it's a bullish candle. That's my buy. Remember, your stop loss has to be below your weekly dodgy candlestick pattern, which should have been beneath here. But I looked left and I saw that, hey, there's a significant zone around here. So you know what? Let me just use below that zone as my stop loss value since it's close. If it was further below, then I would have just put my stop loss below here. All right. So since I could spot a zone around here, so I moved my stop loss below there. So I entered on this candle. Price moved up for a bit, came back down before taking off. All right. At the end of the day, price traveled 4.3. And remember, I'm putting in risk, right? And that was how I was able to pass that account too. Don't worry, I'm going to show you some trades I took that was a loser real soon, because it's not always going to be perfect. But if you don't want to go in aggressively like me, whereby you put maximum risk on, then you'll be fine. Even if you do some, you'll always bounce back since it's a swing trade. But in this case, I'm willing to lose some accounts for the greater good. based on my mindset at this particular point in time. So I'm putting on more risk. I don't know if I should say this. I'm saying a lot because of time, but let me just say it. So another thing I do when I know that, hey, price is going to go, maybe I may hold for too long. How I determine my risk sometimes. So sometimes I want to find out, hey, should I put on 3% risk or 2.5 or 2% risk? I also look at something called swap. Now, there are two types of swap. There's positive swap, there's negative swap. So if I know that it's a negative swap, that negative swap, if it's, let's say I hold the trade for maybe over 2 weeks, that swap can even make me violate the account. So if I know that, hey, this position is going for a negative swap, then I'll reduce my risk on that trade. So if I was originally going to put 2.5% or 3% risk on that trade, I'll go for 2% risk. But if I know it's a positive swap, like the current trade I'm currently on is a positive swap. So the more I hold, they are even giving me money on swap, not deducting. So I'm even making more money on swap. Swap fee is insignificant, but at least I know that it's not my account is not being affected for holding trades for overnight or for a couple of weeks. All right, so I check that, then I'll be able to now know what risk to put on. But I won't go into all of that because time will not permit me. Okay, but before I continue, let me just take a few questions. If you have any question, please just go ahead and raise your hand. I'm sorry, I've been doing all the talking. So if you have any question, please go ahead. Like I said, this strategy, I've actually not put it on the mentorship yet. I've actually not put it on the mentorship because I've been on this strategy for like 6-7 months now. Not even mentioned it. And I can confirm that, yeah, it works perfectly fine. So if you have any question, please just raise up your hand. I can see Mr. Sylvan, so I'll just allow you to speak, sir. So you've been allowed to speak. Go ahead, unmute yourself. Oh, sorry. So go ahead, unmute yourself and ask your question. So still unmute and ask. Be in with is crossing you meet that's be I think go ahead and unmute, please. Yes, 23 speaker. Just unmute and ask. In 323, you need to unmute your mic.
Good evening, everyone, and good evening, sir.
Good evening, sir. Nice. Where are you joining us from? Sorry if you are asking a question, so kindly tell us where you're joining from and your name.
Okay, so my name is Fiso, and I'm joining you guys from South Africa.
Okay, nice to have you join us.
Thank you so much. So may I please ask,
sir.
which pairs does the negative swap apply to? Is it all the pairs or?
Okay. It's a simple answer. So if you have two pairs, let's say you're watching two pairs, one has a higher interest rate than the other. So that's what impacts the swap fees. All right. So just like, let's say Euro USD. So if you're selling, I've not checked recently, but if you're selling Euro USD and you are holding, then you should be getting positive swap. And if you're buying, then you'll be getting negative swap. All right. There's a way you can calculate this. You can just go to Google. You go to Google and type, let's say you want to buy, let's use Euro USD, for instance, Euro, or let's use the pair I'm currently trading at the moment, which is AUD NZD. I'm going to show you guys that trade real soon. The trade has not moved. So it's not like I'm going to be showing you in hindsight. So it's actually still live at the moment. Sorry, let me do this. Swap, just Google swap calculator of Forex. Excuse me. Swap calculator of Forex is a free tool. So just click on, let's go with switch markets. All right. So now currently I'm trading on instruments. You enter what you're trading. So for me, I'm trading AUD NZD at the moment on this particular strategy. Then deposit currency, of course, most of us use USD. So you choose your deposit currency. For me, I use USD. Oh. Okay, but others can hear me, Mr. Mike. Others can hear me, so it may be from your end. I think others can hear me, so it may be from your end. So kindly check your output system. Maybe you need to plug in a headphone or something, or maybe a Bluetooth device. But since others can hear me, then I want to believe that it's not from me. So maybe try to log in on your laptop or maybe on a mobile device, depending on what you're using right now. So try a different device or check your audio output. All right. Sorry about that. So for deposit currency, most of the traders around the world use USD. So you want to enter your lot size. So let's just use one standard lot. So let's say, hey, you're going to be holding for 1 night or 5 nights. You don't know, right? But let's use 5 nights just so that you can use 1 night or whatever. It doesn't matter. But let's choose 5 nights. Then let's click on calculate. Now I noticed that this guy was acting up the other day. I was trying to do this. It doesn't work. We'll use a different calculator. It's not working. So I'll just go back. Let's use a different, let's try this calculator. But I like that switch market because the calculator is very, very easy to understand and it's quite straightforward. But to be able to calculate a swap fee, okay, let's go with Euro USD. Then our currency is USD, right? Then trade size in units. Let's say trade size in units. So this is 10,000 units. So this is basically 0.1 lot size. Because remember, per lot, one standard lot is 100,000 units of the base currency. 100,000, yeah, that's one standard lot. 10,000, that's 0.1 lot. Then 1,000, that's 0.01 lot. So if we are going with 10,000 trade size in units, then this is 0.01. So let's go with 100,000, which is one standard lot. All right, 100,000, one standard lot. Then you can notice even before we hit calculate, you can see swap long. So if you are buying and you are using one standard lot size and you hold for 1 night, they are going to charge you negative $8.
Oh, okay.
And if you're selling, you are going to be making $2 per night on one standard lot. So if you are using 5 standard lots, this will be multiplied times 5. It's a rough estimate. It may not be accurate, but it's around that figure. Just around it. Maybe $1 less or $1 more. It all depends.
All right. Thank you so much, sir.
So I hope that's clear, right? You're welcome, sir.
Yes, sir. Thank you.
All right. So just in case you're using FX Pro, so this trade size in units is trying to tell you when 100,000 units of the base currency, depending on any currency currency pair you're looking at, is one standard lot. So 10,000 units is 0.1 lot, which is I think that's mini lots. Then 1,000 units is micro lots. Yeah, 0.01. That's micro lots. So that's just the key takeaway here. So don't let this trade size in unit confuse you. All right.
All right. Thank you so much.
You are welcome, sir. So I can see. Let's pick. I think the guys have been very, very much interested. So let's go with a lady right now. So I'll go with Miss Esther or Mrs. Esther. Pardon me if I. So you've been allowed to speak, huh? So all you need to do is to unmute yourself to be able to ask your question.
Good evening, sir.
Oh, good evening, sir. Okay, I saw Esther. I was thinking it's a lady.
No, yes, actually, it's my wife's phone, so to say, or she was the one using this phone.
Oh, okay, sir.
I really appreciate you and the simplicity of your teaching. Most of the times, I just stumble at your videos, and they were quite interesting. So I thank you for that. Sir,
I appreciate that, sir. Where are you joining us from?
I'm joining from Kwara State, Ilorin.
Okay, nice to have you join us. Yes.
Nigeria. Yeah. So I want to ask, do you record this video?
Yes.
Or are you recording it?
Yes.
Sorry. Okay.
Yes. I'm
Then
recording it. Yes.
Because I got the first one you said that number one, we need to identify doji on weekly time frame. Then number two, we need to the doji must formed on areas of value, either trend line or on support and resistance or on moving average. So now, the other one I didn't get the entry, how to enter. I didn't get that one. The thing looks somehow. I'm sorry, sir.
No, it's fine. It's fine. So it's actually quite straightforward. So what I do is, for me personally, I start trading when I wake up in my local time, West African time, because I'm also in Nigeria. I'm currently in Kano, precisely. Like right now I'm speaking from Kano State. Yes. Right now I'm speaking from Kano State. So I'm either in Lagos sometimes or Abuja or Kano. I move around a lot, but currently I'm in Kano State. So of course, that's Nigerian. We use the same, we are all in the same time frame, West African time. So what happens is this. So I actually wake up around 6. If you look at my alarm, I have alarm set from Mondays to Fridays, every day of the week. So my alarm, the first alarm rings around 5:45. So I usually have my laptop I'll put it on sleep mode just beside me. Then I wake up. If I'm still feeling sleepy, all I need to do is that's the beauty of having a system. You know exactly what you want to see when you open your laptop. So once you don't see it, it's easy. I'll just close it and go back to sleep. You understand? So once my alarm rings around 6, I just pick my laptop, a small one actually, so that I can just have it beside my bedside. So I just open. So once I open my laptop, I'm looking for, now you have the dodgy candlestick from the previous week. You've confirmed that, hey, we closed with a dodgy candlestick in the previous week. So you know what? When I wake up around 6 a.m. in the morning, West African time, so you can convert that in your own local time frame, or even in TradingView, it's here for us. You can just look at this time zone here. You can just click at the bottom here. So I use Lagos UTC +1. So you can mirror this in your own local time if it's okay by you. I'm talking about for those that is not under the West African time frame. All right. So you can mirror this in your own local time. But this is what I do. So when I wake up, if I am anticipating a buy, because if the doji forms at an area of support, then I'm anticipating a buy. Right? So which means I'm looking for the first 4-hour candlestick that I can see when I wake up that is trading in that buy trade idea that I already had. So now I want to buy. That's the mindset. So my job is, hey, I want to see a bullish candlestick. There are still different ways you can enter this, but I can't give different scenarios. There are different scenarios, but this also works fine. So just look for that bullish. Just look for a bullish candle. Since I'm looking for a buy, I'm anticipating a buy. So I'm looking for a bullish candlestick around that 6 a.m. because remember, I'm doing this on my entry is happening on the 4-hour time frame. So my 6 a.m. candlestick must have started forming around 2 a.m. So 2 to 6 is 4 hours. So if it was a bearish candlestick, I actually like to see a bearish candlestick around that time when I wake up because I will get, which means I get to enter at a cheaper price since I am buying. So I enter at a lower price, giving me enough room to the upside. But sometimes when I wake up around that 6 a.m. and I see that, hey, it's a bullish candle, I'll just get in. But when I see a bearish candle, I'm even happier. So I know that, hey, I need to wait for 10 o'clock candle. If 10 o'clock candle is still bearish, let's say when I woke up around 6, it wasn't a bullish, it was a bearish candle. I wait for 10 a.m. 10 a.m. is still bearish, even better. I wait for 2 p.m., which is around New York session. So if I can now get that bullish candle, that will be my entry. But I know where my stop loss will be, which is below the doji candlestick from the previous week. Then I'll still create a little bit of buffer. Go ahead, sir.
That's on Monday, Abi.
On Monday, yes.
Because you said the previous week. Then, sir, because I want to, normally if a candle is going bullish, first of all, it will sell a little bit. Maybe like you wake up, you are trying to look for a candle. That candle has not fully formed. What if at the end of the day, you're trying to go bullish and it now it goes against you again and starts selling before it goes in your direction?
Okay, you have to wait for the candlestick to close. You enter at the close because that's the only way you can confirm the nature of the candle. So if you are getting in before the candle closes, you are doing it the wrong way. You have to wait for it to close. And that is why I said 2 o'clock to 6 o'clock, because by that 6 o'clock on the dot, a new 4-hour candlestick must have started forming around 6:01. So that is why you have to wait. I usually tell people don't enter before the close of the candle, except maybe it's just a few minutes. Let's say it's a 4-hour candle. You can tell at least a large extent that, hey, it's just remaining 2 minutes before this candlestick closes. The chances of it going from bullish to bearish is quite low. You can tell from the size of the candle. So you could enter that way, right? But it's always advisable to wait for the close, then get in. That's the only way you can confirm that, yes, this is a valid bullish candle or bearish candle, depending on the type of candlestick you're looking for at that particular point in time.
Thank you, sir. I will still go through, but how I wish I just have one-on-one with you. Say I have money.
Because I understood.
Very simple. Even your analysis sometimes 11 minutes, 12 minutes, so and cover a lot. So I really
appreciate that.
I would have loved you to be my mentor.
I'm humbled by that assertion, but I'm just here to share knowledge. Of course, it's a plus because if you enroll, I'm going to make money. But of course, this is just a free information.
It's too costly.
Yeah.
So one says he doesn't want to seek for knowledge. That means the person should try ignorance and he will see.
Yeah.
So, but it's just money. But personally, I would have loved that because I've tried to find where you are and things like that online too. So, Is that money and coupled with so many challenges in the nation and even in the family. I've been in the game for almost 20 years now.
Okay, you know what, sir? You know, there are other people on this call, so this could be a personal conversation. Yeah, so I believe some other people have a question, and I know that there's still a trade I want to show, the one I'm currently in. So if you want to talk to me about your experiences and maybe other good stuff, it's completely fine. Just send a DM. Not tonight. I would love to go and watch that. There's a football match I'd love to watch myself too. So you can just contact me tomorrow morning or just drop your question this night. It doesn't mean I could still reply to them. I could still reply to them while watching.
How? Because I didn't have any. Is it through WhatsApp? I don't have your number. I don't have any. And through the
Okay,
Telegram.
just go. Okay, it's easy. No, from the Telegram you can reach me, or just go to the website letstrade10x.com and click on the Telegram. Sorry, click on the WhatsApp icon you see there. It's bringing you to my DMs directly. So you could do that. Just go to letstrade10x.com. Then you see that WhatsApp icon. Click on it. You'll get to my DM that way. Or I'll send out my direct DMs to the Telegram channel after the session. I'll do that. You're welcome, sir. No, it's completely fine. It's completely fine. All right. So before I take further question, let me just show you the trade I'm currently on. But before I do that, I want to show you some trades that you can lose with the same strategy. All right. I want to show you some trades that you can lose on US oil. Time did not permit me, right? I've been busy. If I had my way, I would have even postponed today's session, but I didn't want to do that because I actually scheduled this session since last week. So many people have been waiting. In fact, I even got some DMs. Some people are watching football right now that couldn't attend. That was when it dawned on me that, hey, what did I do? But anyways, let me show you some examples of trades these types of strategy that you can still lose trades. All right. So remember, this is a weekly time frame. Now you're looking for dodgy candlesticks at areas of support and resistance level. Right. And depending on how you plot your area of support and resistance level, but to me, I'm not talking about this move to the upside now. I'm talking about this move and this rejection. Let me even put an arrow so that you see. Of course, price came here, but the body of this candlestick was here. If you are in my mentorship program, you already know how I like to draw my support and resistance level. I use wick, I use bodies. So look at the sell-off. Remember, this is the weekly time frame. So this was a massive sell-off. Then price went back to my area of resistance on the weekly time frame. Now I want you to notice what happened next. Notice the dodgy candlestick at my area resistance. Now this doesn't mean that this, you see, oh my goodness, I can't explain everything on a webinar, right? If this is maybe a mentorship program, I could go into details because we have time, right? But don't get it twisted. All this zone is a valid zone. But that doesn't mean with this strategy, I wouldn't have gotten in. Let me delete this arrow. It doesn't mean I wouldn't have gotten in at this weekly dodgy candlestick here. So maybe what I would have done is I'll put my stop loss above here, but I know that I wouldn't. See, you have to be honest with yourself. This is 2020, so I've not started trading this strategy at the time. All right. But it's easy for me to say, hey, I would have put my stop loss above here because I can see the sell-off now, but it's a lie. I wouldn't because I would have used this zone as a valid resistance level and my stop loss would be above here. That's the truth. And I would have gotten stopped out. But the good thing is, hey, let's say I even risk 2% on this trade here and I got stopped out. Since my resistance zone is still valid, at least with the second opportunity here, at least I would have comfortably this time put my stop loss above this highest point here. But when this dodgy candlestick formed around here, my stop loss would have been above here. Point blank, period, no lies. And I would have gotten stopped out. So this is just an example of a trade that you can lose using this strategy. All right, so it's not always a bed of roses. You need to know that. But how about other times that it played out? Look at this upper resistance here, which is this trend line. If I move this out of the way, time will not permit me to go into trades. I took this third touch here. But before the third touch, this dodgy candlestick right here, let me point it out with an arrow. This dodgy candlestick right here formed at an area that has been tested multiple times. Looking left, even if I choose to extend it here, I could even capture here. But I could see here. Then notice how it came back here. Then observe the sell-off. All right. Then notice this particular one is using this resistance level above here. But let's go with the trend line, which we get to use the third touch. 1, 2, 3 before the sell-off. Now, at that third touch, let me move this line out of the way. Notice that after the third touch, we got a dodgy candlestick weekly. Remember, all this thing is done on the weekly time frame. Now, notice the sell-off. I actually took this trade. This was around July. I actually took this trade. All right. So there are so many different ways you can take this on that flat support and resistance level or on a trend line. Now, let me take one last thing, which is the trade I'm currently on. So I'm currently in this trade right now. I've been in this trade, funny enough, let me shock you. Now, there's something I didn't show you, the duration of those trades. So some can happen within the next 1 week. Some can happen within the next 4 days. Some you may need to wait 2 weeks. And that is why I put on risk, so that even if I am risking 3%, by the time I get to my target, let's even say I'm going for a 2-to-1 reward to risk, we're risking 3%. So by the time I get to my target, I am up 6%. So it's what's the wait? If I wait 2 weeks to make 6% on, let's say, 400K account, let's say I only have 200K accounts, 6%, do the maths. As a matter of fact, I'm in Africa, I'm in Nigeria. So 6% on 400K accounts is a decent amount of money, right? 10% is $40,000. So 6%, do the maths. So don't look at your $100 that you're trading. Look at getting at least if you don't even have maybe investors funds or family money saved up that you can go in big, then instead of trading that $100, put it in the crop firm account. You have the skill, right? Because if you don't have the skill, you are still going to blow that your personal account where you put that $100 looking for 100% profit. So don't let anybody fool you. But that's a topic for another day. But for now, this is the trade. Now, how did I get into the trade? I actually got into the trade using this. Where's my arrow? Using this dodgy. This one with the bullish color, not the one with the red. I just noticed that, hey, last week we now close with the proper one, which is the red. But I got in with the green. I got in last week Monday, not this Monday, last week Monday. At some point, I was trading 1-to-1, but I didn't close. It was not enough for me. If I had closed, because I'm risking 2.5% of my account on this trade. So if I had closed, I would have closed with 2.5% within just that last week, within 3 days, because I got in on Monday. This 1-to-1 happened on Thursday. So that 1-to-1 take with a 2.5% risk, I would have been up 2.5%. But I didn't close, and price went back to entry, and it's still hogging the entry right now. How did I get in? If I go to the 4-hour time frame, this was where I got in. I got in with the first bearish candlestick that I woke up to. I think it was around here. Yes, here. No, sorry. I got in at the close of this. I got in around 10 a.m. So this candlestick, this 4-hour candlestick started forming around 6 a.m. If you look down, you will see 6 a.m. Monday, the 14th of October, 6 a.m. That was when I got in, around 6 a.m. And if I move this, my zone above, you notice when it started trading around 1-to-1, around here. If you look here, it is 1 to 1.08, not even a little bit more than 1 to 1. So if I had closed, I would have closed with a 2.5% profit last week. I got in last week, I would have closed with that same profit last week, but I was not satisfied with that. I wanted price to come to my TP at least 2 to 1, because based on what I want. All right. So as you can see, price is still trading. I'm just in a very insignificant profit right now. Price is still hogging. It's basically ranging. So I'm just waiting for it to either hit my stop loss. It's out of my hands now. I'm in. Whatever happens is out of my hands now. But I am currently in this trade, and it's a swap profit. So the more as I'm holding, I'm not even in negative in terms of swap. I'm in positive. All right. So this is the current trade I'm on. And luckily for me, I think this also added to my confidence in the trade. The next, which was last week, the next dodgy candlestick. Now look at it. Is historically, at some point we had a dodge here. Look at the sell-off. At some point we also had a dodge here, just like the one I entered with here last week. At some point we had a dodge here. Look at the sell-off. So it's your job to identify what that dodge is with experience. All right. So notice the sell-off. At least we have some examples from the past. Even here, there was a dodge here, there was a sell-off. If you refine this zone when price came in here, remember your zone doesn't need to be static. If it has fulfilled one obligation, you can always refine, because this zone could be here also, but I'm not here to explain all of that, right? So there was a sell-off. Now it's presenting another opportunity here. I'm anticipating the same sell-off. All right. So let me see if I have any other thing to say on my slide before I take the last question. Man, our time is fast spent, right? So okay, yeah, I put this shortly before today's session. Is one of my students talking about his recent withdrawal bets. We are not here to talk about that. So yeah, before we conclude the session, let me take other questions, please. If you have any question, please go ahead and raise your hand. I'll just take one or two and then we call it a day. So I'll unmute the gold commander. So yes, go ahead and ask your question, sir.
Okay, thank you, sir, for giving me this opportunity.
Welcome, sir. Where are you? Your name and where you're joining us from?
Yeah, I'm an Ethiopian.
Okay.
I'm gonna ask you one thing. I'm trading 5 years, so I trade
okay.
Lovely these years. Then I'm gonna ask you one thing. Some days, some years, I lot of loss to about entry. Okay.
Okay.
Then what do you confirmation to use to the entry? I said
okay.
Use doji candle. Say I listen that. Please define the entry confirmation.
Okay, so I'll go over it again. I've talked about this at least twice, but I'll go over it one more time. So there are different ways you can enter this, but time will not permit me to give the different scenarios. But let me give a simple one that you can remember. So I don't know what time zone you're. What's the time there right now? I just want to confirm our time zone.
I don't know.
What's your time?
My time frame is 1 hour.
No, okay. What's the time currently? Like right now, what's the time over there?
My or your?
No, yours.
My currently 5 minutes.
Okay, because it's currently 9 p.m. right here. I just wanted to understand the difference so that I'll be able to answer your specific question, but it's like we are missing each other, but it's fine. So the way I enter is this. So after spotting the dodgy candlestick from the previous week, because it has to happen, the dodgy candlestick has to come from a weekly time frame. So after confirming that dodgy candlestick from the previous week, in the new week, which is Monday now, all I do is in my time frame, my time zone, I wake up around 6 a.m. My alarm wakes me up around 6 a.m. So that was why I was trying to understand your time zone. That was why I was asking what your current time is right now. So it's actually 11 past 9 p.m. my time. So if I understood your time zone, I would have been able to explain better so that you understand. But you can mirror my time zone in your own local time. So what I do is, in the new week now, I go to the 4-hour time frame. So if the dodgy candlestick from the previous week is happening at an area of resistance, now my mindset is to sell. That's my mindset. So since my mindset is to sell because the dodgy is happening at an area of resistance, so my job now is to, on Monday, when I wake up around 6 a.m. West African time, is to look for a bearish 4-hour candlestick close. Bearish 4-hour candlestick close. That is my cue. That is my entry. So which means that 4-hour candlestick must have started forming around 2, closed around 6 when I was waking up, and that is my strike there. That's where I'm selling. Stop loss above the dodgy candlestick from the previous week. Then my target is to the next zone, or my R&R, maybe if I want 2 to 1, 3 to 1, whatever the case may be, that's on you. So let me break this particular trade I'm currently in once again for you. So I got into this trade last week, Monday, which was 7th of October 2024. So first of all, on the weekly time frame, I could spot the dodgy candlestick. So remember in the beginning, I said how you spot your dodgy candlestick is on you, all right? Based on the fact that this webinar is actually not supposed to be this long. We're already way past time now, but please bear with me. So I entered based on this. How you spot your dodgy candlestick is based on your experience or whatever, all right? So, but for me, this is a dodgy candlestick right here. Let me even move this out of the way. This is a dodgy candlestick right here for me from the previous week. So, and it is happening at an area of resistance. So, which means going into the new week, I want to sell. I don't want to buy, I want to sell. That's the idea. So in that new week, which starts which is Monday of the new week, I go to the 4-hour time frame. I go to the 4-hour time frame. So on that 4-hour time frame, I am looking for, when I wake up around 6 a.m. West African time, I want to see a 4-hour bearish candlestick close. Since I wanted to sell, that's my mindset, bearish, right? I want to see a 4-hour candlestick, bearish candlestick close, which is this. So when it closed, that was my sell. Before I could line up, before I could calculate my swap fee, blah, 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 price had reversed a bit. That was why I entered where this line is right here. So I entered around here. Stop loss above the week of that weekly candle. If I go back to the weekly time frame, you'll be able to see that the stop loss is above the week of that dodgy candlestick. I even created a little buffer above just in case price wants to manipulate. Excuse me. So I waited and waited. Price didn't go in my direction. The next week now closed with another dodgy candlestick. So which means buyers are not interested to pushing price higher, at least for the time being. So which means my trade is still valid. So I'm still holding. A little over 1 week now, 1 week, 2 days now, but I'm still holding. So that's the entry. I hope that's clear. There are different ways to enter this, but time will not permit me to go over all those different ways. You understand? There are some ways where you have to allow price come back, at least pull back, but it has to come with rules too. You don't just say, hey, pull back, then I'll enter anywhere. No, there should be a rule for the pullback, but I can't explain that in just one single webinar.
Okay, thank
So I
you
hope
so
that's
much.
clear. You are welcome, sir. So the session is recorded. I'll post a link to the recorded version after the session. So do well to watch the video. All right. So you'll be able to understand better. But I just wanted to show you guys the same strategy and a live trade with the same strategy. So over the next couple of weeks, let's see how I massively goofed on this trade or maybe made it to take profit. All right, so I'll take one more question, then we call it a night. All right. Take one more question, then we'll call it a night. Okay, I see Kigonya. Sorry if I pronounced that wrongly. So you've been allowed to speak. All you need to do is to unmute yourself. Tell us your name, where you're joining us from, and then ask your question. Mr. Kigoya, you've been allowed to speak, or Mrs. I don't know. So just unmute
yes, do you hear me now?
Yes, loud and clear. Tell us your name, where you're joining us from.
I am Chigonya, and I'm calling from Sweden.
Okay, nice to have you join us today.
Yes, yeah, to remind you a bit, that gentleman from Ethiopia, his store was ahead of you. So it should be, it's 11 p.m. at the moment.
Oh, okay, all right, okay. 11 p.m.
Then,
So we have a 2-hour difference then.
Yes, please.
Okay, go ahead.
Now I have two questions. One is regarding your stop loss. I remember you mentioned that if you are swing trading, then your stop loss has to be a bit bigger than intraday trading. So in this case, how much of the stop loss do you recommend in pips? If
Okay,
if my entry time frame is 4 hours.
Okay. So, with experience, you realize that, hey, you don't even need to calculate all those stagnant pips. Like, hey, your stop loss must be 20 pips. Depending on your strategy, though, I'm not going to say it's wrong. But depending on your strategy, you may say, hey, my stop loss has to be, because, my day trading strategy, right, where when I get funded, I now trade that other strategy on it, is I have a maximum stop loss in pips. The maximum is 20. If it's 21, I have to reduce my entry and hope that price comes and tap me in before going in my direction. But for this strategy, your focus is not on how many pips. No, it's not on how many pips stop loss you must have. Your focus is, hey, my stop loss has to be above or below. Above if you're selling, below if you're buying. So it has to be above or below the doji candlestick from the previous week, period. So it's not about how many pips stop loss must be. It just has to be, there is a place it has to be, which is above or below the doji candlestick from the previous week. I don't know if that makes sense. If you are not clear, please let me know. I'll explain further.
Yes, well, it makes sense. It makes sense now. It makes sense. Because actually, what I normally do is that I always use a 30 pips. That is my range.
Okay. Yes, it's actually based on. You are correct, actually. You know, I wanted to knock it off before, but then I remember that no, there are some strategies that requires you a certain amount of pips to be able to get the best out of it. So at some point I understood that your question, and that was why I answered the way it is. So even me myself, there's a strategy that I teach in the my program, which is like this particular one this guy was talking about here. If I enlarge the screen, where I was talking about good news, I made where is that using the strategy blah blah blah. So this particular strategy that this guy is referring to has a maximum stop loss pips of 20 pips. Must not be more than 20 pips, and on certain currency pairs. You understand? That's the rule on that strategy. So I completely understand what you're saying. But for this particular strategy, your stop loss has to be above that dodgy candlestick that you are working with, above or below, depending on what direction you're trying to trade in.
Okay. So now in this case, let me say, as you mentioned that of course, when you start from the weekly and you see that the dodgy candlestick pattern has formed. So yes. Then do you put the stop loss based on the weekly time frame, or you go to your entry time frame as the 4 hour, then that's where you place your stop loss?
Okay. Even if my entry time frame is on the 4 hour, you understand? But my stop loss has to be above that weekly dodgy. Above if you're selling, you get the points, or below if you're buying. Even though I'm executing on the 4 hour time frame, the stop loss has to be above or below.
Okay. Okay. Thanks a lot. Thanks.
You're welcome. So this is a swing trade. So especially for people that have busy schedule, they don't, not even just busy schedule. Maybe you always open your computer on a daily basis trying to place daily trades, and you are amassing lots and lots of stop losses. You just don't know how to figure out being profitable. When you swing trade, you have a higher win rate. That's the technique. People always don't understand this concept of win rates. So some people will say, hey, I have a 90% win rate. Okay, fine. You may be making the same money with somebody that has a 40% win rate that is day trading. It's possible. You just look for your sweet spots and stick with it. So for you that is swinging, maybe in a month or even within the space of 3 months, you've only placed like 4 trades and you lost only 1. Of course, you will have a 90% win rate. But there's someone else that is day trading too with a 40% win rate, and is also making the same profits that you are making too. So it's not just everything. There's this balance in trading that many people don't know. So it goes from your strategy to your risk based on that strategy to the win rates. The win rate, actually, as a matter of fact, is used to determine your strategy. So if this is your, my goodness, I'm digressing. I don't even want to go into all of that, but there's a way you balance everything to be able to now find your sweet spot. Some people be like, hey, I have a good strategy. But they don't know that, hey, their problem is balancing it with risk. When I say that it's difficult for me to blow an account, it's not because I don't have my own nasty drawdowns too. You understand? I'm digressing here. No, this is for the benefit of everybody. It's not like I don't have my own drawdowns too. I do. But what I do is, if I've gone to, like, let's say it's a very, very bad period for me and I've gone 3% down or even 4% down, now I know that at that point I've dug a hole for myself. So I'm willing to spend that time. I don't want to go on and blow 400k prop firm account or 1 million in funding or 2 million in funding. I don't want to go on and blow that. So I'll be patient enough to dig myself back out of that hole. So if I can have 2 consecutive, let's say I'm 4% down and I now have 2 consecutive winners. At that 4% down, I'll keep reducing my risk per trade. I don't want to get to that 8% maximum drawdown. I'm talking about prop firm. I'm not even talking about normal accounts because the risks are usually different on those accounts. But since prop firm is quite popular, I'll keep reducing. I know I'm already in a hole already. I'll give it time. I'll give it time to crawl back out of that hole. When I say I cannot blow account, doesn't mean I don't go into nasty drawdowns too. I do. but I balance my risk with my current reality. So when I'm recovering, I'll now start upping my risk so that I can quickly catapult myself out of that hole. You understand? It's a balance. You just have to know how to balance the things together. It's not just about the strategy alone. You need to be able to balance it with this and that and this and that. So trading is just one. It's actually simple. Strategy. Get the skill first. Get the skill, which you can get anywhere, right? You can watch it for free on YouTube, but you have to give yourself time to be able to master it. Because I always say, it's not like I didn't watch YouTube videos or read ebooks, but I never paid anyone. As much as I want you to pay me so that I'll teach you, so I'll make some side income, but I never paid anyone. You understand? So if you're willing to dig in deep, you have to give it time. You can do it. Trust me, you can. You understand? The essence of all these mentorship programs, though some people don't live to what they promise. They sell you a dream and they tell you that if they place 100 trades, they win 99%. It's a lie. You understand? So mentorship is a good side income for we that are in this, that is in this space. Trust me, because I could do maybe, let's say, $10,000, $15,000 in accounts, in prop firm accounts or stuff, and I can do maybe $3,000-$4,000 in mentorship. So are you saying I should pass up on that? So the problem here is some people, they offer that mentorship without value. So yes, we all know that you're making money for offering that mentorship, but are you backing it up with value? You should be able to back it up with value. Also, some people that are lifestyle marketers, it's okay, it's not bad to do lifestyle marketing, but do you back it up with value? If you can back it up with value, then I don't care how you make your money. But if you do lifestyle marketing but no value, you're just cheating people out of their money. So that is just basically it. So trading is you versus you. You need to see that way. It's you versus you at the end of the day. I've seen people that I taught my strategy and the way they implement it better than me. Maybe they already have this mindset. They already have a mindset of their own. It could be maybe their risk appetite, because I consider myself super conservative, right? So there are some people that have larger appetite and they will execute with that risk appetite more than I do. And they'll even be making more money than me. I may be making more money on paper than them because I've amassed so much funding in capital, but they are actually doing better when it comes into percentage. So I could do maybe 7% and they are doing 12% for the month. So if they have that exact same type of capital that I have, they will be doing way more in liquid, you know what I mean, liquid cash and stuff. You understand? So if you actually want to go with us, though I'll be the new topic because I'll be doing like 2 webinars and I'll be doing this quite often, trying to provide value from time to time. I know that my students have they have more priority, but there will be another webinar before our mentorship program. The topic is going to be announced, which will be next week actually. Next week, Wednesday. That was how I was sending out all those votes. Though the next week's one is going to be, I'm going to be opening our eyes to the possibility. I'm going to be abusing our mind about what is obtainable in the Forex market. You will notice that for me personally, for those that has been with me for a long time, you know my mindset. You already know the story. My mindset shifted when what bridged the gap for me between profitability and blowing account was when I started watching people like S&B Capital. They are also a prop firm. They're not these online prop firms. I'm talking about actual proprietary firms. You understand? And their likes, I saw them celebrating 12% for the whole year. And I was like, are these guys crazy? How can I be celebrating 12% for the whole year? I didn't know that, I was trading on my $200 account. So how can I be celebrating $24 at the end of the year? That was when it dawned on me that these guys have billions of dollars. So 12% is a whole lot of money. 20% is a whole lot of money for the year. And here I am in my corner 1-bedroom apartment, starving, trying to flip an account. Consistently is impossible. I'm not saying you cannot flip account, but you can't do it consistently. So that's the difference. So that was when my mind shifted. And that was when it dawned on me that I know how to trade. I just didn't know that 12%, if I can do 12% consistent, what's 12%? If I can even do 1% consistently monthly, I am better than those 95% of traders in the world. And that was the turning point for me. Because I was so confident, I know that was 2% in a month, I can do it. But I can't do it on $100 account because that's just $2. I can't be celebrating $2 at the end of the month. I can't be celebrating $4 at the end of the month. So you know what? I need to take on more capital. So let me look for someone that is going to give me money. And when prop firm became popular, I went all in. That was it. That was it. So if you keep chasing flipping accounts, you will flip sometimes. It's 100% certain. It's not like you can never flip an account. And it's easy to even flip accounts with swinging. So what you do is just increase your risk. If it's your actual capital, let's say you have $1,000, for instance, or let's say you have $10,000, you invest it into a brokerage, you put it into a brokerage, and you are risking 4% or 3% per trade, and you are going for 3 to 1. Let's say you are going with 3% per trade, you go with 3 to 1. That's 3 to 1, 3 times 3. That's 12%. If you do that for the next 6 trades, 12 times 5, it's almost 100% already. So within the next 5 quality swing trades, risking 3% per trade, you're almost flipping the account. So that's a better way to flip account than just putting in $100 and trying to flip it within the next 2 weeks. You will never be consistently profitable. I usually don't just conclude, because I know the market is a wide place and the possibility is endless. You can think, hey, you know it all. You see someone else's strategy doing massive numbers and you be, wow. The one thing I will tell you categorically is you cannot flip accounts consistently. I don't care what someone with 1 million subscribers is saying. That one for a fact I know, because if you can do it consistently, Elon Musk is your boy. Point blank, period. Elon Musk is your boy. If you can consistently flip money on a monthly basis, that magic strategy that mentor is telling you that you can do, Elon Musk will be your boy within the next 5 years. 100 to 200 this month, 200 to 400 second month, 400 to 800 third month. Keep doing the maths. That's a massive compound interest you're doing there, because you are consistently profitable on flipping accounts. Within 5 years, with that $100 investment, even Bill Gates will be in your house sweeping. You should know what I mean. So, well, that's just a little bit of encouragement there. And thanks for staying to the end of it. I enjoyed myself. I want to believe that you also enjoyed yourself. I promise that it's going to be 1 hour, and I went way beyond that. We are even going closer to 2 hours, which is our standard time for our mentorship program. I'm sorry for taking your time, but at least I believe I've been able to at least add to what you already know. And once again, like you already know, if you want to participate in our mentorship program, it's coming up on the 11th of next month, please do so. And if you have any question regarding what has been said today, also feel free. I'll send my DMs into my DM link to the general Telegram channel, so you can always reach out to me. I'll personally be there to answer those questions. All right. So thanks for joining in. Thanks for tuning in. And I'll see you next week. The next topic is going to be posted tomorrow or next. But anyways, within this week. So thanks for tuning in. Thanks for staying to the end of this program or this webinar. And I'll see you in our next webinar. Good night. Good day. Bye, everyone.